Okay. Any questions before we get going again? Depreciation or? Okay. Contra account. When we buy the truck, remember the truck cost us $30,000. And we put that balance in the truck asset account and we leave it there. We don't ever change it, we don't get rid of it until we sell it. So because we can't change this, we're tracking the book value of the asset through another vehicle, through this tool that we're calling the accumulated depreciation truck. So as we expense the little pieces of the truck that we use up every month, we're going to record that over here. And here, let me use some big. So in year one, we used up $6,000 of the value of that truck. Okay? What's my book value? 30 minus 6. My book value, and I'm just going to make a column over here, is $24,000 at that point. So I can't change the value in the truck account until I sell it. So I'm tracking the depreciation, the part I've used up in this other account called accumulated depreciation. This is the contra account to truck. And you have to take the balance of both accounts and add them together to get the true ending balance, which we're calling book value. Good? Okay. Other questions? Yes, ma'am.
The truck account there, would it ever have in the credit side a number other than what you purchased it for?
No.
Regardless of when you sell it, if you sell it, and it got run over 3 days after you bought it.
No. No.
So that account will always zero out once you get rid of it?
Right. You know, we can get into asset impairment and things later, but I don't want to cloud the subject now.
I was just wondering if in general.
Okay. In general, no. Okay. Will there be a time? Yeah, we'll get to it in about chapter 12. Okay? You know, if the truck gets... Truck's a bad example. If you wreck the truck and you can get it fixed, it's still worth that.
Right.
If you total it, it's worth zero.
Right.
Let's say you have a piece of equipment that I paid $300,000 for that makes, you know, iPhone 3s. And they come out with the iPhone 5. How many of the 3s am I going to sell? This machine won't make 5s. It'll only make 3s. Is this machine worth what it was? See, but I'm still going to sell some because you're still selling the ones cheap. You know, if they're selling them for $50, I'll sell some, but nowhere near as many. It's partially impaired. Okay? Then we can talk about that. Okay? All right, other questions? Moving on. So, trial balance. List all of our accounts, list the ending balances, prove it's in balance. Identify the accounts that need adjustments, calculate the adjustments, post them on the adjustment column of your worksheet. As soon as you add that, it becomes a worksheet. Total the columns, prove they're in balance. Again, if my beginning trial balance is in balance and my adjustments are in balance, I have a good shot at coming out in balance with my ending trial balance, my adjusted trial balance. Okay? So what we're going to do in the next step is calculate the balances in the adjusted column. Cash, you take your debits, you add or subtract any debit or credit, you put your new balance over here. Are there any debits or credit adjustments to cash? No. So I would just bring the $85,000 across. Accounts receivable, 5,000, no adjustment. I would have a $5,000 debit as my ending balance. Supplies, I have a $3,000 debit, $1,000 credit. What's my ending balance? $2,000 what? Debit. Okay? So you just go down and you do the math across, and you're not going to show me? Ah. And you fill in your adjusted trial balance.
Shows it on 133.
It will, but it's going to kind of digress for a moment. So we're just going to skip that. Fill that in, total it again, and prove that your adjusted trial balance is in balance, and that tells you that you did your math across correctly. Yes, ma'am.
Okay, so if you, let's say you bought supplies 1 month, and then you bought supplies another month, and you used some of those supplies, are you going to assume that the post-it notes you bought 1 month cost the same as what you bought the next month, and then minus that value?
No. You're getting into inventory valuation, which can be rather involved. So let's keep it simple.
Supplies you're selling?
No.
No.
Inventory, you sell inventory.
Yeah.
So there's the difference. If it's something I'm going to sell, it's inventory. It goes on a store shelf.
Yeah.
If it's something I use, it's a supply. It's an internal supply. So the name tells you that they're different things.
Yes.
Okay. So I still have an inventory of supplies that I'm going to keep, but I need to know the value. So you make a basic assumption. You know, first in, first out. So the ones that are still there are the last ones I bought. So you value them at the last purchase price. Okay? There's multiple valuation assumptions you can make.
Yeah.
Let's just go with first in, first out for tonight. We'll get to the others later.
All right.
Okay? Keep it simple. Other questions? You guys, of all the classes I've taught, are asking questions, 5 and 7 chapters out in front. It's great. Yes?
Is that really common, really standard that you value supplies?
You need to know how many you used up. So the way to do it is you count what's left, calculate its value, and subtract it from what you had. And if it's gone, you must have used it. Very common.
I understand that. It's just that I think of supplies as all your paper and toner and whatever supplies you
Yeah.
need to run your business. I've never
Never what?
valued them or depreciated them.
We're not depreciating them at all.
You're saying they were used for
We brought them in their assets. If we return them, they're worth money. If we sold them, they're worth money. Okay? What you're probably doing is expensing them as you buy them, which is not GAAP. However, it is fairly common. My job is to teach you GAAP, however. If it's an immaterial amount, say you use up $50 worth of supplies a month, does it matter? No. If you're, $100,000 a year in sales size business and you're using $5,000 in supplies a month, it matters. Okay, so there's that element of materiality as well. All of you had your hand up.
I'm just trying to think it through here in regards to supplies. Since we work at an animal hospital, we use a lot of supplies, pens, post-its, blah, blah, blah. all that
Yeah,
stuff.
yeah.
To my knowledge, the accountant doesn't ask for any supply usage numbers or anything like that. She takes our receipts and what we use and, play them.
You're expensing it just like she is. Okay? Again,
Is that not something?
it's fairly common,
Yeah.
however, it's not GAAP.
Right.
Okay? If you have an argument and a logical reasoning that it's close enough to, both methods come up with almost the same number or, a reasonable facsimile of the same value that you're expensing every month, then it's not worth the effort.
Yeah, huge effort.
Okay. So again, it's that, remember there's materiality. Is it enough to worry about?
Yeah.
Okay? And is it going to materially affect your net income? So if it's a huge amount of effort to come up with a slightly different number, it may not be worth it. There's no value in doing it. So you don't do it. However, over time, if you're consistently doing it the way you're doing it, it will not have a month-to-month impact on your net income of any magnitude. If you switched from one method to the other, you might see a big change that 1 month. So you're being consistent, I'll give you that. And that's a good thing. Okay.
This
Yes.
is actually back to this worksheet.
Uh-huh.
So when you finally go over to adjust trial balance.
Adjusted trial balance, yes.
Adjusted trial balance, that's when you're going to,
That's when you're calculating across.
right.
Yes.
So the total amounts, if you added those to the debits, and the credits should be your totals on the adjusted trial balance, right? Correct?
Trick question, I think. Is your question, if I added these to these, I should get that number here? No.
Oh, okay.
You will not. If you expect to, there are times when that just will not happen.
Okay.
Okay? Because think about it. You could have a debit here and you're posting a credit to it here. You're affecting the debit balance.
That's right, okay, right.
Okay?
Gotcha.
So they will not be the same.
Okay, that makes sense.
Yeah. But I'm glad you asked, because that does throw people when they don't get that.
Those are going to end up being
Result.
still debits over there.
Right,
Okay.
right.
Gotcha.
Okay. Next question. Yes, ma'am.
So for the supplies, it's 3,000, and for adjustments, it's 1,000. Those
3,000 debit, 1,000 credit.
Yeah.
So you add your debits and your credits, which your credit reduces your debit. You have a $2,000 ending debit balance.
Well, what does the 1,000 mean? Then there's supplies that we used?
Yeah, this is what's gone. I know that I'm trying to adjust to a $2,000 balance. To do that, I have to post a credit of $1,000 to bring this down to 2. So what that does, though, is it puts $1,000 down here in expenses for supplies expense, which is where I want it. So this is what I want. This is how I make it happen. Okay?
Thank you.
Yes, ma'am.
When you buy something, so I'm taking that we're going to do, the journal is going to be put onto this, all our information, so any supplies we purchase throughout the month will be included in that $3,000 balance already?
You bought supplies, you got an invoice, you posted it in your general journal, you posted that to your general ledger. The ending balance of your general ledger then goes here. Okay? Then we make an adjustment, and we're going to take that and we're going to post it back to the general ledger so that the ending number matches the general ledger. Okay? Yes, ma'am.
So are you saying that you're not, like, you don't journalize those?
We are going to post these to the general journal.
Right.
I'm sorry, the general ledger.
Okay, but
We're going to skip the general journal with these.
okay, but in the book it says to journalize and then post the adjusting
Oh,
entries.
yeah.
So like,
We're going to write up some adjusting entries in the general journal. You are correct. Okay? But it doesn't go in the general journal the way that you were doing before, where we did one transaction after another. We're going to put all of these together in one entry in the general journal, and I'm going to show you that. Thank you for helping me clarify that.
Now, does the general journal for each adjusting entry have a single page for the adjusting entry?
Yes. So all of these will go wherever we stopped with the general journal. Say it's halfway down the page. You're done for the month. Flip the page. You'll have all of your adjustments on the next page. Okay? Then there will be some closing entries. But we won't get to that until next week. Okay? So I'm sorry if I wasn't clear about that, but yes, these go in the adjustments entry
right.
in the general
They're
journal.
not separate entries in the
You could do them separate, but you don't. You could. Okay? They're laying them out as being individual, but I'll show you kind of a hybrid where at the top of the page you write adjusting entries, and then you just do A, B, and C. they'll all have the same date, so you don't have to fill that in, and you don't need the description because they're titled adjusting entry. So it saves you some time. Okay? Other questions? Yes, ma'am?
So in the past, even though the book says to record everything in the adjustments in the general journal, no, I'm getting confused. You don't want us to. You just want, I mean, not general journal.
Now, you've used them both
Okay,
backwards.
it says general
So
journal.
we're going to make an adjustments entry in the general journal.
One, though.
One, okay? I'll show you, okay?
And then.
And by one, I mean you just titled at the top, adjusting entries, and then you do entry A, entry B, entry C, D, E, F, G, whatever there are, and you don't need to put descriptions in there, and you don't need to change the date,
Okay.
okay?
And then one.
And then you take those and you post those to the general ledger, okay? All right. That's what I meant, and I apologize for not being more clear. Okay. Other questions? Other things I've messed up that you want me to clarify? Okay. Book value we've talked about. Adjustments in the worksheet. Okay, we're going to complete the worksheet. Here we go. I like throwing this up there because I like showing you guys where we're at. Everybody remember the accounting cycle, right? Step 1, analyze the transactions. 2, put them in the general journal. 3, post them in the general ledger. 4, trial balance worksheet. This is where we are. From here, we're going to use that as a tool to prepare those financial statements. Good? How many financial statements are there? 3. Okay. Here we go. Now they're going to show us how to carry the balances across. But we've already done this, right? So the shortcut they're showing you here is if there's no adjustments, just bring the balance across. Do the math on the others, debits, credits, come up with your ending balance. Okay? Accumulated depreciation has no balance, and then a credit adjustment leaves you a credit balance. Okay? Supplies expense, no balance, debit adjustment leaves you a debit balance. Same thing with rent and depreciation expense. Okay? And you total those, prove you're in balance. No, they do. Your totals don't add across. It won't work. Okay? Just like you asked. Here's the other little cool trick, is we take all of the income statement items and we drop them into the income statement debit and credit columns. So everything from here down, notice fees, income, and all of your expenses. Good? All of your balance sheet, your permanent accounts, all the way down to the drawing account, get put in this far right column marked balance sheet. Good? Okay. We were in balance here in our original trial balance. Our adjustments were in balance. Our adjusted trial balance is in balance. Now we split them up and we're good, right? Not in balance anymore. Something has gone terribly wrong. What do I do? Oh my God, right? Okay. There's method to the madness. The difference between your debits and your credits in your income statement will be the same as the difference between your debits and your credits in your balance sheet. Here's why. Look at what we've got in the income statement. Revenue and expenses. What's the definition of net income? Revenue minus expenses. Net income gets closed to where? Owner's capital. So, we're setting ourselves up for when we close this out via the statement of owner's equity to owner's capital to make it balance. So what I'm going to do here is do the math, and my difference between my debits and my credits here is going to be what number? Net income. Doesn't matter what the number is, it's going to be net income. Okay? So I calculate the difference, and I plug in the debit that I need here to make it balance, and the credit that I need here to make it balance. Okay? Notice, if you need a debit here, you will need a credit there. If you need a credit here, you will need a debit there. If you ever end up with a debit and a debit, your math is wrong. Okay? And then you come down and you show that once you've made that adjustment and these numbers are the same, that you're still in balance. Okay? So you've got a tool here. Here's your income statement. And when you're done at the bottom, you will show net income of this number. So if you make a mistake on your income statement, you will have a clue that you made a mistake. Okay? Good? Yes, ma'am.
On a test, if I put like a dash through all the boxes that I know are going to be empty,
Yeah.
are you okay with that?
Of course.
Okay.
Other questions?
Can you repeat that?
Of course. What she said is if she comes and puts a dash in each of these boxes, you know how in Excel you can format it with as blank or with a dash instead of it, or a zero? She's just asking if she could do that.
But not that.
Oh, I apologize, yes. Calculate the difference between your debits and credits. And that's the amount. Plug it in here on the one that's lower so that you can make the balances come up to be equal. Do the same thing in your balance sheet. The amount will be the same as it was in the income statement, and you'll be in balance. Okay? Good. Question? No? Anybody? Moving on. So, once you're done with that, you're done with the worksheet. There's no more room on it anyway, right? So we go to preparing the financial statements, which is step 5. Really easy at this point. You can draw a nice big red line across here, and I'd love to, but they'll kill me. Right at fees income, and you can take those accounts, and those are what go straight on your income statement. Drop in the amounts, bang, you're ready to go. You even know what net income is already. Your biggest challenge is remembering who, what, and when at this point. Okay? Who, what, and when? Revenue, fees, income, expenses. List them, total them, subtract, and you get net income. Well, look, it's the same number that we had over here. So it worked. So it's a double check that you didn't make a math boo-boo here on the income statement. Everybody good with that? Questions? Yes, ma'am.
I remember you said you put some slides online. Is this one?
All of these slides are on Blackboard. Yes, you can get to it. Anybody else?
About templates for filling in, for doing homework.
No. No, sorry.
The Excel spreadsheets.
The Excel spreadsheet is laid out specifically for the mini projects, and I didn't spend the hours and hours and hours to lay those out. I stole them from Michael Booth. I'm sharing them with you for nothing. Okay? All right, other questions? Okay, moving on. What's the next statement? I just gave it away. Income statement, statement of owner's equity, followed by the balance sheet. So the statement of owner's equity, who, what, and when. Okay? Remember, the income statement is for the 1 month ended. Statement of owner's equity is for the 1 month ended. The balance sheet's the weird one that's different, that it's a snapshot at a point in time. Okay. Statement of owner's equity. Is there help for the statement of owner's equity here? Yes, but it doesn't have its own column, like we have income statement and balance sheet. But we do know that all of the statement of owner's equity stuff comes right in the middle with the capital and the draw and net income, correct? So we come over here and we can start with the beginning balance of capital, pull the $90,000 right off of that worksheet that we just prepared, add net income, subtract any draws that the owner took. Did he add more cash to the business? Doesn't look like it. We would know. So he's got a net increase in capital, ending, total, owner's capital, ending December 31, 2010. It's 108,633. Good? Does it match the balance in owner's capital here on our worksheet? No. Are we okay with that? Yes. This was our beginning capital. When we're done and we move these balances up here, it will be 108,633, but that's next week. And that's my bait to get you to tune in next week. Okay? The third and final the third and final financial statement is the balance sheet. Who, what, and when. Balance sheet is a snapshot at a single point in time, so it's a single date. Assets, liabilities on the other side, and owner's equity on the other side. Notice they're each got their title. Titles are underlined. So we can come over to the balance sheet columns now, since we've already used the income statement, and we can pull the accounts, and we can walk through this. Cash, accounts receivable, supplies, prepaid rent, equipment, accumulated depreciation. Those are all of your asset accounts. Accumulated depreciation, even though it has a credit balance, is a complementary account to the asset equipment, and they stay together, even on the balance sheet, okay? So when we present that, they didn't do it. So we list our accounts: cash, accounts receivable, supplies, prepaid rent, equipment. Underneath this, you would list less accumulated depreciation, 367, and you would subtract it, okay? I like to take it and indent it and do the little math here and show net asset or net equipment and show the total over here and then total straight down and get my number.
But that's still balanced though?
Yes, it will.
With that other side, because they didn't do it.
This is wrong,
Okay.
okay? This slide has an error in it, and I'm trying to tell you
But
without...
even with those numbers that we used back there, it wouldn't end up...
Unless I include this,
Okay.
it's not going to be in balance. So it's missing, and there's a boo-boo over here that there's an error in the slide. This should be 22,000 less the 367. And I'm being very open and honest about that. There's a mistake. Okay? Total assets. Liabilities, we only had the one. It was accounts payable. Nice. Very few liabilities. Owner's equity, capital. Add those together, you get total liabilities and owner's equity. This shows that they match. Do they really? No, you're missing the accumulated depreciation, right? Okay. But they should balance when you're all said and done. Good? Questions on any of the three financial statements?
When we, after requirement, we must put the depreciation and the other side, it's 365.
It goes over here, and you'd show this as 21,000.
And on the other side,
It doesn't go over here.
no?
It just goes on one side only. You only use it once, and it goes with equipment. They stick together.
But it is
So
taken
how
off
would
that
it
side.
balance with
What?
the right side?
It is taken off of the left side, the right side, as your net income. In your net income. That's added to your.
Hang on. It's affecting net income here, but if you do the math here, notice it doesn't come out to 115,633 at all. It's missing.
Right. But
Okay.
I think that's what they were asking, that the expense is already taken off the income.
Yeah,
That's where it is.
net income drives this, and the depreciation expense is included in that. So yes, it is here. It's on this side, it just isn't printed over here, and they did the math as if it were. All that's missing is it's not printed on this as a line over here. Okay? Which is confusing, and it drives me crazy. Because I try and teach you, and you guys are confused, and yeah. Yes, sir.
So when we add the assets and liabilities on the balance sheet, we don't add the accumulated
You do.
asset
The accumulated depreciation.
depreciation.
So you would go cash, accounts receivable, supplies, prepaid rent, and to show this correctly, you would list equipment. Here, let's just do that side real quick. Yay, I like this idea.
Example is on page 136.
Almost as good as watching me do it on the board. Okay, so you'd have assets, cash, accounts receivable, and I'm abbreviating, you can't. Supplies, prepaid rent, equipment, less accumulated depreciation, net equipment. So cash, we have what? 83.5. Accounts receivable, we have 5,000. Supplies, we have 2,000. Prepaid rent, we have 3,500. Equipment, we have 22,000. Less accumulated depreciation of 367. Net equipment is 21,600, help me out here, 34, 3, good. And then you would do the math and come up with total assets of 115,633, like that. So I actually show the equipment and I reflect the accumulated depreciation. Bring the total out into the other column and total down. Okay? Good? Much more clear? Yes. Thank you, book. I appreciate the help. Yes, ma'am?
I just want to make sure we're okay if we do it both ways. You want it this way where you indent and put net equipment. The book doesn't do it that way.
The book does in other places.
Okay.
They're probably just showing you a straight down to keep it simple.
Okay.
You're smart. You're picking this up quick. I'm kind of getting out in front a little
I
bit.
just don't want to get it marked wrong because I
It will not be wrong.
9 marked wrong for doing that putting thing.
Okay?
Just want to make sure we can.
Okay. All I'm doing is highlighting that there's equipment, there's accumulated depreciation, and I'm showing the net value. The intent is to reflect that net value. Okay? And this is a disclosure thing that's required under GAAP, so I'm doing it. Okay? Yes, ma'am.
So the book in this chapter currently, it doesn't give you a net equipment, it just lists the 21,000 next to the 367. Is that okay?
There is another way to do this, okay, that is, there are several common ways to do many of these things, okay? The other common way to do it, everybody's good with this, is you do this. Equipment, net of accumulated depreciation of 367, and you just dump it in there. So if anybody wanted to know, they'd add the 367 back and know it was $22,000. Bang, done. Move on. Okay? Did you have a question? Anybody else? Okay. What?
So the book does it.
That's what I just did.
They just don't have a line that says total.
Oh,
net
okay.
equipment. Brings it right over.
This is fine too. Okay? I'm just trying to be, it's gone, but I'm trying to be really clear. And this is fine. I don't have any problem with that whatsoever. This is called a side-by-side balance sheet. This is a top and bottom. Notice? Assets, liabilities, owner's equity. But we do come down in total assets, double underline, and we double underline here so that these two numbers should match at all times. Either is great, depending on how many accounts I have and how much room I have. I like using this one about as much as I like using the other. Okay? How does it fit on a page and how is it easy to read? If you're going to bind your financials in some sort of a book, all of a sudden the reader has to take this one and turn it. No. Okay? Yes, it's okay. It's not a big thing, but you're in a meeting and everybody takes it and goes like this. Sometimes doing it this way is just easier. They don't have to turn it, right? Just helpful for the reader. That's all. Yes?
Will the test that we'll be taking, will it be the same kind of layout as the other test where you give us the format in which you want us to use the balance sheet and whatnot?
You're welcome to choose either of those two formats. I'm not going to worry
Well,
about
the test you gave us, you had it.
The first test, I really kind of spoon feed you a little bit extra, you know?
Okay, so the
Yeah.
next one will have to use.
It's going to be more free flow. Yeah. Okay. Good question. Great. You're welcome. I don't want to limit you. I want you to be able to use your knowledge. Okay. Now, remember, the worksheet is not one of the three financial statements. There are only three financial statements: balance sheet, income statement, statement of owner's equity. This says it's not a permanent part of the record. Okay? That doesn't mean throw. There are people who say, oh, you just throw it away when you're done. Excuse me, I've got all these adjustments on it, and what if I made a mistake and I have to go back and figure it out? I get real nervous about throwing things away. As an accountant, you probably will become uptight about that too. Maybe not until after you've made a mistake or two, but it will come. So I tend to just, fold it in half, stick it in with the permanent records and keep it in case I ever have to go back and refer to it. But it is not something where you hand it out at a meeting and say, here, we're going to go over the financial statements. Cool? So we're all the way around to step 5. We've prepared the financial statements. Step 6 is record the adjusting entries, which is what you were talking about. We're going to take these adjustments, remember there were 3 of them, and we're going to put them on a new page in the general journal. And at the top, you're going to save yourself some effort by just writing adjusting entries across the top of the page. You can put the date down once, it'll be the end of the month, October 31, 2013. And you can sit down and you can write your adjusting entries. You will, of course, apply A, B, and C to designate which one matches which one on your worksheet. But you don't need to do a description. You don't need to redate. You don't have to. You can save yourself a few steps.
But you're not going to do the same thing where you debit it in the account, credit the account.
Just like the regular general journal, yes.
The only difference really is that you just don't have to do the date.
Well, it says adjusting entries, so if anyone ever wants to go refer to them, they go back and look at your worksheet. Oh, that's why we don't throw it away.
The only thing you're not going to put, that you would put in a normal journal entry would be the description and then the date for each one.
Right. And there will be a posting reference because we're going to post it to the general ledger.
There's still a description, it's not the description of the...
Well, I'm putting it across the top of the page, adjusting entries, so I don't have to write it for each one.
Well, yeah, but the accounts are still going to be listed in the description section. But, yeah,
Correct.
that's everything.
You're still listing the accounts, you're still showing the debits and credits, yes. Okay? Other questions? That's fine.
If you're saying in the general journal, you're going to put A, B, and C?
Yeah.
Because in the book it doesn't show that.
We're going to reference each one. I'll show you here in a second as the example comes up.
Journal.
Yeah.
Okay.
Okay. Well, here's what they did. Date. They brought the date down. You don't have to repeat this. Adjusting entries across the top. You've got, here's the first one, here's the second one, here's the third one, A, B, and C. Okay?
You don't put A, B, and C in there.
You don't indicate them as such, but you separate them as each individual. Yes. Okay. Good clarification. Debit and credit, debit, credit, debit, credit. Notice this is General Journal page 3. It's all on its own page. And then you've got the post references as you carry these and down to the individual general ledger accounts. Just like we did with the homework for chapter 4, right? So bring the date down, description, debit, calculate the balance. Post reference is the last thing you put on to show that it's done, and you carry the account number up and you put it here to show that it's been done here, right? Okay. This player comes here, this player comes here, this guy swings around on defense, and boom! All right, questions?
The description, it's just adjusting?
Adjusting entries. This is really getting lazy, isn't it? Okay?
It's just that, that's all.
Yeah, I would put adjusting entries, but this is being lazy. Okay, other questions?
Typically, you would have a running balance.
This is obviously the only entry to this account, or there would be a beginning balance or a balance above this, and you'd be adding debit to come up with the new balance.
Because some of the examples have a running and some don't, so
Right.
normally, I mean, it's supplies expense.
And remember, there was a zero balance in this account before we made the adjustment. So this is logical. Zero balance plus our adjustment gives you the ending balance.
Because it's the same, because it was just the supplies one, it would have the beginning balance of 3,000.
If this was supplies, it would have a 3,000, and our entry would be a credit, and we'd come up with a $2,000 debit ending balance. Okay? All right, yes, ma'am.
So let's say you're doing this all by hand and you have your books for every single account. For your supplies expense book, could you put every single month on one sheet because you're only making adjustments to it?
No, you're starting a new one.
Every single month?
Every month, you've got a new page. Yeah. And if you use up a page and a half, you start the next month on page 3, and so on. Okay? That's why you use a computer. Okay? In the old days, this is how it got done. But the point here is, you understand all the workings behind the scenes, what that computer's doing. So when something goes wrong, and it will, everybody else at work is going to be sitting there going, I don't know, it's a crazy number. I don't know where it came from. You're going to sit down and go, let me show you where it came from and how to fix it. And by the way, you should be paying me more money because I know how to do this stuff. That's really what this is all about, right? Okay. On the camera? All right. Other questions? No? Maybe? All right, the battery's going dead, so I have to shut up. Is that how this works? Okay. Next week we'll go over the Chapter 5 homework. We'll cover Chapter 6, okay? Work on the mini project. If you want to come before class and bring it with you and ask me questions, a lot of people did that tonight. Okay, I'm a good resource before class. See you next week.